Thank you both for those really great talks before this. It actually will lead to some good discussion and also some very good background for things that I'm going to chat about as well. So my name's Nick Wobbrock. I'm with Blue Forest Conservation. I was an engineer who then went to business school, in part following Colin's advice about finance and management for how do we get this stuff going and moving. Has anyone here, raise your hand if you've heard about conservation finance? Raise your hand, keep your hand up if you still know have a sense of what that means a little bit or would like to hear more. This is going to be a little bit of a different talk. Actually, also raise your hand, are you nervous about people investing in conservation? Because I would be, if I didn't know much about it, thinking about investors. So this is partly a talk to share how the Forest Resilience Bond works, what sort of goals it has and needs. We're a nonprofit, but we're trying to use lended capital or debt financing to fund restoration work. Now, Colin, I actually agree a lot of it. It might not be a money problem. There's a lot of money out there, but it's often a working capital challenge. Do you have the money when you need it to get the work done? Because most of the money, I've heard agencies talk about weaving budgets together. I've also heard about different definitions of success from water agencies. They might have different strings attached to that money and how they define success or when they can use it. And if you're an NGO implementing a restoration project and you can't pay your contractors within 30 days, within 60 days, your costs are going to go up. And you're not going to get the type of pace and scale of restoration work that you want to see. So while I agree, I think this is sort of an added layer of an option for areas that might have working capital challenges. So here's a picture of the Feather River. I'm going to go through some slides very quickly because you all have far more background than I do. And then we'll have time for questions now and then at the end during the sharing session too. But the talk that the other speakers have shared about an overabundance of trees, if you've seen the Dr. Paul Hesberg talk about the era of megafires, that really, I'm from Portland, Oregon originally, and we're based in California, and we're working in the Sierra Nevada. There are problems in Colorado, in New Mexico, in Oregon, in Washington, in California with fire exclusion that have created tremendous challenges and risks to our infrastructure and our communities, and these mega fires of over 100,000 acres. These are side-by-side pictures taken from a great book called Fire in the Sierra Nevada from George Gruhl that has 100 side-by-side pictures. I encourage people to look for that if they're looking for historical ecology. So we've seen, and this is a Forest Service stat of the increasing cost of fire suppression. From 1995 to shortly in a couple years, the budget is going from the single-digit teens to over 2/3 of their budget fighting fires with relatively flat appropriations. So if you want to do some of the proactive fire risk mitigation work, that such as forest restoration like here, and that the other speakers have been speaking so eloquently about, you need to find the money from somewhere. And if you would like taxes to be raised, you could raise your hand, but that's not going to do anything necessarily. And if you're not going to raise taxes to find additional money, you're going to have to bring it from somewhere else, whether that's schools or law enforcement or other sources of money. None of that is quite palatable. Now, if I could tell you to give me $1 and I'm going to go spend it in a way that's in your interest, you're probably not going to want to reach into your pocket. But if I were to go have you agree on how you define success, and if we achieve that success, you'll give me $1, you might feel much better about that, especially if you get to help define what the terms of success are. And if each stakeholder can help define what the terms of success are for them. And we've actually done that in something called the Forest Resilience Bond Project. It's in the Tahoe National Forest. I'm going to play a little short video that with cartoons describes how it works, and then I'm going to describe in detail how that first project's working and also share some of the upcoming projects that we have in the works to plan, often working with some of the partner organizations that you've heard here. So 1 second. Oops. And there's no sound yet, so let me see here. Any solutions here? Okay, I'm going to keep it going, and you can watch a video that's on our website later. So how the Forest Resilience Bond works is, well, let me see if I can get this going. You guys will be far more entertained if you can hear this.
Is there a volume button on this?
Oh, thank you. Let's see. If not, then we really will move forward. But okay, so we have this Forest Resilience Bond. Projects are already planned by the Forest Service. Oregon has 1.5 million NEPA permitted acres that aren't being implemented. There's many other shelved projects elsewhere in each state that the Forest Service has already planned. They've already gone through, and Blue Forest is not a part of this. So the idea that there is a backlog of restoration projects that are ready to be implemented, that have been prioritized, we don't need nearly as much science now. I mean, we need to continue the science, but we also need to continue to fund the work that's already been planned. So part of that mechanism is to bring additional financial resources and human resources to implement the work. So we're working with the World Resources Institute to help do an economic case on the benefits of these shelved projects. They're shelved because of a lack of human resource capacity and financial resources, to then create contracts with the stakeholders in those watersheds that can pay back the restoration cost over time, very similar to a water fund. One distinction, though, is that some water funds, or some water agencies, are naturally a very risk-averse group. They have a lot of public scrutiny. They have very restricted uses of how they can spend their funds. And if you can line up their definition of success with how they pay, it can make it easier for those quasi-governmental entities to help pay for restoration. In addition to restoration, we heard Weston talk about how can we develop industry that's going to facilitate this restoration work. Well, that industry, if you're going to invest in the infrastructure to manage this restoration work, you're going to need large landscape scale projects. I think the Rio Grande is a good example of how that can help be facilitated, but other types of projects like that, hundreds of thousands of acres over many years, are what's needed if you are going to invest in that infrastructure. This Forest Resilience Bond project that we have, this first one, it has an implementation partner that's a trusted group from the Forest Service. In this case, it's the National Forest Foundation, who's doing restoration work according to the NEPA prescriptions that have already been planned by the Forest Service. But one key component is that the National Forest Foundation does not have the working capital to implement a $4 million project. They get a couple $1 million appropriated from Congress every year on a national level. If they're going to go do a $4 million project, where are they going to have the working capital to implement that? And many of the grants that can come from the state of California or other public agencies, other states in your state, are reimbursable. Meaning you have to go do the work, submit for an invoice, wait 6 months perhaps, and then you can receive the funding to then pay your contractors. So what I've been told by the National Forest Foundation, as well as a group called River Partners that does river restoration work, for their contract work, their bid documents, they usually put into their contractors, we will pay you when we get paid. So if you're going to wait 6 months as a contractor and you're mom and pop wanting to do trying to do restoration work, what are you going to do when you competitively bid on one of those projects? You're going to raise your costs, or you're going to not have interest because you can't afford to wait 6 months or longer to get paid. So to work, and the National Forest Foundation likewise can't extend that money to say we'll pay you promptly because they don't have the money in their account. So you have a working capital challenge that sometimes different funding mechanisms, this is just one tool in the tool shed as the Forest Resilience Bond. There's others that we're seeing too that I'm really motivated by, can help alleviate that cash flow constraint. So why might water utilities care about helping to fund watershed restoration? We've seen a better video than I could put up here of that landslide. That's specific to geography in New Mexico and probably in specific watersheds in certain areas. One of the other benefits from restoration, though, and one of our partners is the Sierra Nevada Research Institute, which is part of the University of California. And they've been doing work on the correlation with using satellite data, looking at how forest water use or evapotranspiration changes with improved forest management, as well as longer and retained snowpack. So this is a pretty tight, you very rarely in science see a tight correlation like this, I think. I've been told by hydrologists. This is actually really tight. You're using satellite data with field instrumentation flux towers and showing a tremendous correlation between greenness index and NDVI and how much water vapor is being evaporated around. And I'll show you later on how that in hydrologic models can demonstrate to utilities an potential for increase in water quantity from restoration projects. Now, why would an increase in water quantity matter to a utility? Probably obvious to many, maybe not so obvious to some in the room. But if you can sell more water, or if you can generate more hydropower, that is revenue to your organization. That is also good for the environment in many places that are dependent on groundwater and would have to pump and use energy to pump groundwater at a cost. So if you can talk to a utility and say, in addition to the risk reduction benefits, the potential avoided costs from less water quality and the treatment costs of that, rebuilding infrastructure, dredging reservoirs, all of these are local costs that may exist in the watershed based on geology, based on the different environment and the watershed condition, the forest condition. There's also a potential for enhancing the revenue of water agencies in some parts of the country if there's an increase in water quantity from this restoration. And you can measure it and therefore put a contract around that and say, pay us, or if you accept this model, would you be willing to sign a contract that says you will tie some payment to some of these outcomes, which may make it easier for specific agencies to participate in a forest resilience bond or in funding watershed restoration work. But who else benefits from restoration work? So Colin shared that great graphic with a handful of the images of a water fund. Insurance companies might be an entity as well, insurable assets. You see these dramatic costs that are being associated. There's with these large mega fires. We're also seeing potential for carbon credits on private lands with improved forest management. You also see from some of the restoration work, whether it's in aspen regeneration or meadow restoration that we saw, where encroaching conifers are being removed and have some timber value. Well, that's a restoration activity. A co-benefit is that there's actually some revenue of timber coming from removing these encroaching conifers. Now, when does that timber value usually come when you're doing a restoration project or when you put the work out to bid? Maybe 2 or 3 years later, that the forest will retain the receipts and then fund stewardship work. If we can front load all of that potential value now and do work now and give the certainty to industry in your communities that might make investments in biomass handling infrastructure, we can then recover the benefits from that, the revenue streams from the timber, from the avoided costs, from the protection of water quality, from the enhanced water quantity, and help fund restoration work. Skip over a few slides here. So we're working with, in the Tahoe National Forest, a water agency called the Yuba Water Agency that generates hydropower as well as sells wholesale water downstream. They're also a flood control district. The National Forest Foundation is implementing this work. A handful of foundations have both supported us in the past and provided something called program-related investments. That's a pretty exciting opportunity when also blending money with, so we have 2 investors, 2 foundations that provided 1% loans to fund this work. That's a pretty good deal. Anyone who can get 1% money usually looks for it. We also have market rate investors, Calvert Impact Capital and AAA of California. All of these investors invest in the project, not in us, and they're providing money at 4% interest rates. And we're blending that money together to provide a 2.5% loan to a project where the work can then start immediately And as some of the revenue comes back to pay for it, can both cover project costs and that loan rate. The World Resource Institute has been a key partner that's helped develop the economic case for these restoration projects, doing a specific cost-benefit analysis that I'll get into shortly in a few slides. So part of the Forest Resilience Bond, we've developed both with our partners, how do you evaluate the benefits that you would expect in enhanced water quantity, protected water quality, reduction in fire risk? What do the contracts look like that could allow stakeholders to pay for those benefits over time? And then what is a financial vehicle or a spreadsheet that can provide where's the money moving and when is it coming in to cover that loan rate? The opportunity in finance, while this is quite a bit of work for our project, which I'll show a few slides about, is protecting 15,000 acres of land. The need is in the 6 to 8 million acres in California, and how does the Forest Service say 40 to 60 million acres across the country? This is a tens of billions of dollar problem to do the restoration work that's needed. Now, all of this has been a lot of semi-brain damage and pain to figure out what do the contracts and measurement and approaches look like, and it wouldn't make sense for a $4 million investment. But it really does make sense. The one thing finance can do well is scale, if you can pay back the loan. Now, I talked about foundations and market rate investors funding this. Well, in California, the pension funds have a mandate to put money towards climate resilient infrastructure, and California also has a tool that every state has, which is the state revolving fund, which can provide very low interest rate capital. And these could be blended for a similar, very competitive rate to get tens of millions of dollars moving towards projects with payback from entities over time. So how does this work? There's lenders that provide money to an LLC that's established for each watershed or each vehicle. That money is provided to implementation partners at zero interest rate. As they do work, other beneficiaries, and as some of the benefits are measured, pay back to the Forest Resilience Bond vehicle that's provided that money. So the National Forest Foundation is getting all the money up front at zero interest costs, zero line of credit, which is a traditional way that cash-constrained NGOs either don't grow or they get out on a limb and try and do too much, and then they wait for reimbursements, and then they really suffer. So we're trying to get around that working capital challenge. We have a whole process of how these projects are developed. I removed this slide, but in the latest iteration, it came back as we... But needless to say, we're funding projects that already have a NEPA permit, and we're not part of the planning process. So there's no investor saying, do this work, don't do that work, this can get me a better return. You don't have to worry about that. There's a governance approach where we really are just supporting the projects that have already been planned. So where is this project occurring? It's in the Yuba, North Yuba watershed of the Tahoe National Forest. Here's a fire risk map of extreme fire and very high fire if you look in the northern northwest portion of it. This is a map that we put in front of the water agency where we use the Forest Service own FSIM large fire simulator model and did some probability calculations of instead of the annual fire return interval and a fire escaping containment, what would the probability of a fire over the next 30 years occurring in escaping containment? And it's really a flip of a coin in this watershed based on the models that the Forest Service had produced. And that helped convince the water agency to say, this is a challenge that we need to address. So far, there was a 7,000 acres of treatment protecting 15,000 acres of work. It doesn't just include fire and fuels reduction, but also aspen regeneration, some meadow restoration, the things that the Forest Service had planned in the NEPA through a collaborative process. So we're not dictating that, we're funding the whole thing. And now that this first project started in November 1st and contracts were signed, and the National Forest Foundation has already spent $1 million of the $4 million, there's been a collaborative that includes the Nature Conservancy coming to figure out how can we get 200,000 acres planned in this area. The water agency has said this is a better model if we were going for them to be able to pay based on outcomes and on a flexible contract over time. So we're hoping to scale this up and do a true landscape scale project in this area. Let me keep going a little bit further. These were also slides I left, but just to show a little bit of how the satellite data, this is how much evapotranspiration was occurring within the red polygon. This is the evapotranspiration for the forest with the larger boundary. And just in a few choice years, within that boundary, you can see a massive decrease in the greenness in that red polygon. And you say, well, how do you know, what's going to happen the next year? Well, there was quite a bit of regrowth in shrubs, but then that died back and it went back to brown. This is the type of measurement that is pretty comprehensive, but also quite simple for groups to look at. The Sierra Nevada Research Institute is who I would punt more difficult questions to for you to talk to if you had questions about how this works. But it was a very nice way to show a system that actually can close the water balance using USGS gauges and flex towers with also showing satellite data. So what Blue Forest really does, which is why I didn't put this graphic up first, is develop what the contracts and loan agreements and the financial vehicle to get this work funded. And this is not fun to look at, these boxes, but this is some of the nitty-gritty stuff. So I put it at the very end. But in summary, there's a big project that's going to cost a certain amount of money. And if you're going to loan and provide that money up front, there's going to be a small amount of interest. If we can de-risk it very low, make it a very low-risk project, you can get a lower rate of interest. And we have to figure out a way to pay that back. And future projects, because this is a pilot, but this could also have another stack from insurance companies, from carbon credits, if it's depending on the land ownership, from other beneficiaries, some that want to sign contracts based on outcomes, some that want to sign cost share contracts. We have an MOU with the Forest Service, and we're looking to expand this across the western US with interested forests that have ready projects that are sitting on the shelf, which isn't often the case, but it can be the case, and we want to help be part of the solution from a capacity standpoint. Thank you very much.
Plenty of time for questions.
Please.
So you're front-loading these projects on the hopes that you can deliver some product at the end of these companies want. What if you're not able to deliver and they don't want to pay, which is could happen with a lot of vegetation projects you're not able to obtain what you sought out to do?
Yep. Yeah, great question.
Would it be a loss if they're not willing to pay and you've already spent the money?
Yeah, great question. Well, it would be. So part of our work really is to, in the finance jargon, de-risk projects. So try and get the certainty of those cash flows as likely as possible, or at least articulate the risk so that an investor, which could be a foundation too, that says, hey, I'm willing to take that on. This is exciting enough. There's enough expertise, academics, others saying this makes a lot of economic sense. We got to fund this. How can we try something, put the risk on so it's not on a water agency because, or the Forest Service, because that is a pretty challenging appetite to swallow for some agencies. For other agencies, they can, or for other investors take on risk. They get paid to take risk. So I would say one, how we set those contracts up is part of the delivery of that project too. So some of the money from the state of California is putting quite a bit of money from their cap and trade program into wildfire risk mitigation, but all of that money is that reimbursable nature. So lenders are taking on a risk of implementation and execution. If you don't get the work done, then the money from the state also won't be provided to reimburse the lenders. So there's some execution risk, but it's otherwise a fairly certain cash flow from a high credit rating agency. So good question. Yep.
If the impetus of your work is to help fund, say, 6 months or more where contractors aren't getting paid, I understand it's probably bureaucracy, but what is it? What's the reason there's that lag time? And why don't we target that as a solution?
That would help. Partly there are a lot of there's a two-part answer, so I had to go to this slide. If you could accelerate that processing time, it might the state can only process things as quickly as it can. So you can make some of this money advanceable, but then let's say the project doesn't get done and the money isn't used as entirely prescribed, there's going to be a risk on the state side. So I think the reason why it's reimbursable is not as much there may be a policy fix that people could take that risk on, but it's the states saying, we don't want to front money until we know it's provided that work. So it's a risk avoidance, and maybe you could get it to 3 months, but then the National Forest Foundation has to turn that around, and they have to have at least 2 weeks or a month to do it. Part of it is the 6-month lag on reimbursements from the state, but part of it is the 3-year or 4-year lag on the timber value from doing restoration work too in conifers and aspen. So that's not an immediate cash flow, but it will be a recognized value stream that we're advancing. And then part of it is the Yuba Water Agency is paying $1.5 million, $300,000 a year for 5 years. They have some flexibility to moderate that if outcomes are not achieved. Of that $1.5 million, about $300,000 of it is going to just directly cover the interest rate for this whole bucket. So they're covering the interest for the whole loan in how we have this set up. 1.2 million is going towards paying for the principal or going towards the project. And so this, I posit, is one mechanism to maybe make it easier for a water agency to also contribute. We're not just solving the 6-month grant issue, we're also giving NFF 0% money for the amount that they are going to receive from the state, plus granting them an additional 1.2 million. So it gets in the weeds a little bit, but there's more new money than just bridge financing on state grants. So.
Good job, Nick. Are there other organizations doing similar work around the West?
Well, let's see. There's Quantified Ventures is a group. They did something called the DC Water Bond, and they're also helping fund recreation work on National Forest System land for trails, and I'm not sure how they're lining up repayment, but they focus exclusively on outcomes-based payments or payments for ecosystem services. A longer story, but everyone gets excited about paying for ecosystem services, at least the foundations that initially supported us. We found out, wow, water agencies, they might like to modify their payment a little bit. They don't want to have a really big swing. Investors that are providing loans, they don't want to have a really big swing. A lot of this is also motivated by the work that Nature Conservancy has done. I mean, water funds are a great example of I think what this is hopefully being complementary to and adding to. And this might make sense in some places, but if it's more complexity, than what's needed, go straight for a water fund, I would say. Yeah, thanks for the question.
I'd love to know what your biggest hurdle is. You know, this is not your normal group that you probably talk to.
Yeah.
I know my head's spinning a little bit, so is that, what do you see as your biggest hurdle right now?
So every 6 months, our biggest hurdle has changed. We've been around for about 4 years. Oh, yep. The question was, what's our biggest hurdle to scale it? And I was saying every 6 months, it seems like we have a different biggest hurdle. Getting an MOU with the Forest Service on a national level really opened up the doors to working in a lot of places. So we're looking at projects in Washington State with the Nature Conservancy also. I'm just talking about it, but having some hopefully good opportunities, as well as expanding that project in California and then a few other national forests. I think if there was a database of planned projects that had been NEPA permitted or were undergoing the planning process, would be quite helpful in certain regions. You can look at the SOPAs, the Statement of Planned Actions that forests are doing, but it's not as comprehensive as what we would like to see. Polygons and treatment prescriptions and be able to make I wonder if I have a slide here. So this was a roll-up slide of what the World Resources Institute helped us with an avoided cost and an enhancing water revenue financial calculation. You don't have to look at the details here, but the point is working with utilities for a 6-month time with Yuba Water Agency, we asked them, how do they value an acre foot of water? How do they value, what would the replacement cost of infrastructure be? And a lot of these things we figured out I figured out, for me at least, for the first time over the last 3 years. And now it's going to be a good template for future projects of an approach that can be taken. And so that's why the hurdles keep changing every 6 months. We also have contracts for this first project that I think it's like a 12-page contract that the water agency had to sign, that they would make repayments that had some variability if certain outcomes were achieved. We can reuse that for future contracts and build upon it so that it's tailored to what specific agencies need. There's no reason. We have more flexibility maybe than a big consortium that's forming a collaborative. It can be very difficult for all the many parties to sign one MOU and also say, well, who's paying what and when are they paying it and by when are they paying it, and if you don't pay it, what happens and how do we each define success? The water agency has no formal agreement with the Forest Service in this project. They see each other, they like each other, they wave to each other, but contractually they don't have any formal agreement. And that actually made this a little easier, I think.